Welcome back. Today I am sharing information about RBI to transfer a bulk of amount to center. Why? The Reserve Bank will transfer rupees 99,122 crore as surplus to center for 9 months ended March 31st, 2021. The decision was taken at the 589th meeting of the Central Board under the chairmanship of RBI Governor Gandadas through video conference. According to the RBI, the board in its meeting reviewed the current economic situation, global and domestic challenges, and recent policy measures taken by the Reserve Bank to mitigate the adverse impact of the second wave of COVID-19 on the economy. With the change in the Reserve Bank's accounting year to April to March, earlier July to June, the board discussed the working of the Reserve Bank of India during the transition period of 9 months, that is from July 2020 to March 2021, and approved the annual report and accounts of the Reserve Bank for the transition period, the RBI said in a statement. The board also approved the transfer of rupees 99,122 crore as surplus to the central government for the accounting period of 9 months ending March 31st, 2021, that is July 2020 to March 2021. While deciding to maintain the contingency risk buffer at 5.50%, the RBI approved a rupees 1,76,000 crore, that is $24.8 billion dividend payment to the government, including rupees 1,48,000 crore for financial year 2020. It earns via interest income on account of open market operations, that is OMOs, foreign exchange, that is FX, gains, and writing back of excess risk provisions. RBI's liabilities, including insurance of notes and deposits held. The transfer of surplus is expected to help the government ease fiscal pressure caused by the COVID-19 pandemic and also aid it in giving the economy a boost. In the past, the demand of the RBI for highest dividend and to part with the greater share of its capital has been a hotly debated issue between the central bank and the government. The amount of surplus to be transferred by the RBI to the Government of India is considerably higher than the budgeted level. This will offer a buffer to absorb the losses in indirect tax revenue that are anticipated in May and June 2021 related to the impact of the now widespread state lockdowns on the level of consumption on discretionary items and contact intensive service. Moreover, high commodity price at a time when demand and pricing power are subdued wouldn't the merging of corporates in many sectors, compressing the growth in different tax collections. Thank you. For the above said reasons, RBI to transfer rupees 99,122 crore as surplus to central government to solve the issues at the time of pandemic.